Hey traders, welcome to another episode of our Smart Money Concept Trading. In today's video, we're diving into the best technique for combining multiple time frames to create a well-informed and clear chart analysis. We'll be merging price action with smart money concepts, demonstrating how to effectively execute a top-down analysis. By the end, you'll be able to identify market direction, supply and demand levels, liquidity zones, and trading. So, what exactly is top-down analysis? It's a technique that combines the analysis of multiple timeframes and market factors to give you a comprehensive understanding of market conditions. By starting with higher timeframes and zooming in on the details, we can gain a macro view of market direction and key levels across all timeframes. But be careful. Starting from a higher timeframe like the monthly chart and applying every concept you know can clutter your chart, making it useless when you reach your entry time frame. This video will guide you on what to look for in each time frame to create a well-educated and clean analysis of any chart. Let's look at the pound dollar on the 5-minute chart. The market appears choppy, with no clear direction, confusing traders who are trying to find a trend. But when we zoom out to the 1-hour chart, the trend becomes apparent, showing bearish pressure. This is the same area we saw on the 5-minute chart. By knowing the higher time frame's directional bias, we can confidently take short positions on the 5-minute chart. On the Euro-Dollar 15-minute chart, we see a strong bullish move with a clear fair value gap, which suggests a valid order block and a potential long trade. However, if the market suddenly reverses, it's often because of a key level on a higher time frame. By zooming out to the 1-hour chart, we notice the reversal could be due to the price hitting a higher time frame resistance. Checking these higher time frame key levels helps us set better targets, stop losses, and avoid unnecessary losses. Using multiple time frames also allows traders to identify optimal entry and exit points. For example, if you're waiting for a price pullback to an order flow area, entering trades on lower time frames can help you get a better price, reduce the chances of false signals, and increase your confidence. Now, let's explore the best technique for combining them. We focus on 3 time frames. First is the higher time frame, which consists of the weekly and daily charts for key market structure. The next is mid-level, which is the 4-hour and 1-hour charts for market direction and trading opportunities. And lastly, the lower time frame, which is the 15-minute and 5-minute charts for confirmations and precise entries. Starting with the EUR/USD on the weekly time frame, we mark the key levels of market structure. These levels are where price has historically reacted, acting as potential support or resistance when the price reaches them again. We only draw the most recent levels near the current price to keep our analysis simple and effective. Next, we zoom into the daily time frame to adjust these levels for the greatest number of touches. We also draw additional daily key levels in a different color to distinguish them from the weekly levels. This helps us maintain clarity as we move down to the lower time frames. On the 4-hour chart, we fully apply smart money concepts such as identifying market direction, supply and demand areas, order blocks, fair value gaps, liquidity zones, and potential trade opportunities. Here, we notice the market has recently broken below a key daily level with momentum, indicating that supply is in control. We also identify an order block zone created by a fair value gap, which could present a possible short entry. However, since the price has rejected a key daily level, we look for bearish confirmations in lower timeframes before entering short positions. On the 1-hour chart, we see that the higher time frame directional bias is bearish. We look for a change of character in the price action to confirm that the short-term uptrend is over and that the market can continue pushing downward. If we see this confirmation, we can enter a short position, set our stop loss, and target the next level of market structure. On the 15-minute chart, we focus on precise entry points by waiting for the price to reach the order block zone and confirm a trend reversal. Our first target is the daily level, and if broken, the next weekly level. Always backtest your setups before trading live so as to build confidence in your strategy and optimize it for better performance. So, that's how you can combine multiple time frames to improve your chart analysis and trading strategy. If you found this video helpful, please like, subscribe, and leave a comment with your questions. Thanks for watching, and see you in the next episode.